Joining us right now is Mike Pyle. He is Global Chief Investment Strategist at BlackRock. And Mike, let's get your thought on this. Is this a pullback that's a reversion to the mean? Is this an undoing of the trade that we thought? Or is this just, we've come a very long way and it's time to give back a little bit of that?
Yeah, I would say that there are some really significant sources out there of fundamental uncertainty, of fundamental volatility looking into the fall. Obviously, a lot of restarts around schools, the economy more broadly, risks around the coronavirus as that happens, risks around U.S. fiscal policy and the support there, risks around the U.S. election over the coming 8 weeks. So in some ways, we think August was a little bit calmer than the fundamentals would have suggested it should be. And the volatility we've seen come back in over the past week is just a reflection of the fact that this is an uncertain environment as we go into the fall, but investors are going to be rewarded by staying invested through that volatility.
Staying invested in what? Should they be staying invested in in the FANG names, in the tech high flyers that we've been watching, or would you be advising they pick maybe some of the 490 other stocks in the S&P 500?
So I'd say it's a little bit both, and the things that we've really come to like recently, we upgraded our call around U.S. high yield last week. We continue to think that credit broadly is the better place to be taking risk exposures right now. It's a positive backdrop for risk overall, the restart underway, strong policy backstops, but the valuation picture on things like high yield looks somewhat more constructive. The proximity to policy support looks somewhat more constructive. So that credit space broadly, but high yield in particular, looks to us like a place where investors are going to be rewarded over the coming period of months.
Mike, you listed all of those concerns that we have, and I get it. These are concerns we've been kind of watching for a long time. Why do you think now we are suddenly focusing on it? Is it the calendar, or is there something else that's happening? We've talked about SoftBank and some of the options plays that have been going on in the market. You think this is technical issues? You think this is underlying fundamentals in the market? You think that, again, this is just the calendar and we realize, okay, a lot of these issues are going to have to be decided in the next 8 weeks?
Yeah, I think it's a little bit all of the above. So clearly the technical dynamics that you described were a sort of proximate cause for some of the volatility we saw last week. But again, I think to our way of thinking, a little bit these risks that I flagged that we're all talking about were the dogs that didn't bark in August. And I think as we've turned the calendar over into September, as we're looking ahead into a fall, into this 8-week sprint to the election, into the 4 weeks between now and when some of these fiscal policy issues are going to have to be resolved, as we see that growing drumbeat around U.S.-China frictions. All of those things are fundamental uncertainties out there that are really now being recorded by markets.